Market news now. Stocks in Asia came off their session highs as investors redirected their focus towards U.S. inflation data that may shape the outlook for interest rate hikes into next year. The dollar was little changed. Investors will be closely watching the consumer price figures later today, which is expected to remain elevated even as the rate of increases slows. The subdued CPI print would justify the Federal Reserve's projected half-point move tomorrow and shed light on whether markets can expect rate hikes in later 2023. However, locally, Goldfields CEO Chris Griffith has resigned from his position as the company expressed disappointment about the miners' bungled attempt to take over one of Canada's biggest gold mines, Yamana Gold. Griffith previously was the CEO of Anglo American Platinum. He took the top job at Goldfields in April last year. He succeeded Nick Holland, who had held the post for 13 years. To unpack the latest on the markets, we are joined by Michael Traherne from Vestec Asset Management. Michael, thank you so much for your time this afternoon. As we, look ahead to that CPI print as well as what we can expect probably even from tomorrow, how are you assessing market sentiment and the JSE's performance right now?
Yeah, I think the overall market sentiment is upbeat and expecting CPI to slow a lot more than expected. Last month, this time, when US CPI came in, the US market jumped 7% on the day. So it gives you some idea of the significance of the read that will be coming out at 3:30 our time. That will impact how global stock markets move. It will impact our currency, and it will probably set the tone for the rest of the year. So that's a very, very big thing. Looking at our markets at the moment, we're up about 50 basis points at the moment. In general, though, financials slightly weaker, the rand slightly weaker, and it seems to be concerns around Parliament's vote on the Phala report and potential future problems for our president.
On that, when you interact with your clients, what are the main concerns, whether it's South Africa or it's the global economy? Like, what are they asking you about and what's keeping you guys up at night?
Sure. Lots of concerns globally and locally at the moment. On a local front, it's the lack of economic growth. It's all the news stories of corruption. It's failing infrastructure. Those things are hard to ignore. And then on the global front, it's how global and international countries are dealing with high inflation levels, rapidly rising interest rates, and the ripple effect from Russia's war. So all these things are problems, and they're probably going to be with us in 2023, but hopefully at a lesser extent than we saw this year.
So we've got a whole host of central banks probably meeting for the month of December, but I've picked up probably like 3 top ones for me. There's others as well, the ECB, Bank of England, as well as the Fed. In terms of expectations, which one, obviously the Fed you'd be paying attention to, but what are the expectations here from the markets when it comes to those 3 central banks?
The expectation is for continued rate hikes, but at a slower pace. I'd say that the ECB and BOE are almost inconsequential compared to the Fed. The US dollar is the global reserve currency. It's what drives global money flows. So whatever happens this afternoon in terms of US CPI, and then tomorrow with the Fed's interest rate decision and subsequent press conference, you will see those ripple effects all over the globe. Less so for the BOE and also for the ECB. Obviously for us at home, the SABC rate decision on Thursday, that's always big, and that actually hits our pockets on month end. So for us, ECB, the Fed and the SABC, hopefully the interest rate hikes are less than expected.
Based on that response, then, is there anything that could come out of that CPI figure, as well as comments from Jerome Powell, that would alter your outlook for 2023? What will you then be paying attention to when you look at that CPI figure and you listen to that press statement tomorrow?
Us at Vestec, we 5-year, 10-year type investors. So these monthly fluctuations are less of a concern with that sort of outlook. We've generally been in the camp that says inflation is probably going to drop faster than people expect. We've definitely been wrong for most of 2022, but that view seems to be changing now, where inflation does seem to be dropping faster than expected. If we don't see the quickened drop in inflation this afternoon and tomorrow, then you can expect a very, very rough start to 2023, probably worse than we saw this year.
Right. Michael, we're going to have to leave it there. Thank you so much for your time. That is Michael Traherne from Investec Asset Management.